But what could go wrong? What could go wrong with a bridging loan? So picture someone taking out a bridging loan to buy at auction, because that's one of the top three reasons why someone would do a bridging loan. And they're expecting to refinance it quickly. So they're expecting to do the refurbishments, add value to that property with the work that they put into it. And then they're expecting to refinance it with a mortgage because the mortgage is their exit strategy. But then they find out that there's delays or they're unable to complete the work on time. Your home may be repossessed if you do not keep up the repayments on your mortgage. So, what is a bridging loan? People often come to me and they've seen something online and they have these complex investment schemes and they're like, I need a bridging loan. Or maybe they're buying from auction. A bridging loan is a short term loan secured against property or assets designed to bridge the gap until longer finance is in place. They're commonly used by property investors at auctions where fast completion is required or when a property chain breaks and quick access to funds is needed. So I'd say the two main groups of people that come to me about bridging loans would be people that are buying a new home. So they have a home, they need to sell the home to buy the new home. Potentially they're in a chain. The chain breaks and they need to purchase this new home before they've sold the home that they're in. That would be group number one. Group number two tend to be experienced investors. So these are people that have several properties of purchase and sold properties in the past, people who have flipped properties, people who have buy to lets. But what could go wrong? What could go wrong with a bridging loan? So picture someone taking out a bridging loan to buy at auction, because that's one of the top three reasons why someone would do a bridging loan. And they're expecting to refinance it quickly. So they're expecting to do the refurbishments, add value to that property with the work that they put into it. And then they're expecting to refinance it with a mortgage because the mortgage is their exit strategy. But then they find out that there's delays or they're unable to complete the work on time. If the refinance is delayed or declined, they're left paying high monthly interest and risk losing the property altogether if they can't repay. What are the pros of a bridging loan? It's fast and you can get large sums of money in days and not months. I've heard stories of bridging loans being turned around in 2 or 3 days. I would say give it about 10 to 15 days. But if you're an experienced investor, if you've done this before, those are the deals that tend to turn around really quickly because you'll have all your documentation ready. You'll have the plans for the property together. You've done this before. You're not new to the rodeo. So those are the ones that tend to turn around really quickly. Another pro is it's got flexible uses. So you can use it for residential, investment, or commercial. You will find with like further advances and some other ways of taking equity out of a home that they're very limiting and they won't allow you to use the funds for certain things. Whereas with bridging loans, they're more flexible, but I do want to stress these products are designed for professionals. So as a professional, you'll be able to price things out and understand how much it will cost you, how much you're going to make, and what a solid exit strategy is. So those are the pros of a bridging loan. Let's talk about the cons. These are the bits that people don't consider because I find that when people enter into these situations, they're always thinking about everything going right. So I'm going to make tens of thousands of pounds because I'm going to get this bridging loan. I'm going to flip this property. But things can and do go wrong. You have to prepare for things going wrong. Don't just focus on things happening right. So there are higher interest rates. So if you look at a bridging loan and you're considering doing it, you need to crunch your numbers and understand that the interest rates are quite high. So you want to have a solid exit strategy and you want to make sure that you're going to be in profit at the end of the whole thing. So there are arrangement fees, exit fee, valuation fee, legal fees. There's lots of fees that need to be paid. So these things need to be taken into account when you're budgeting and doing your assessment on if this is the right product for you. So if, let's just say, you're buying something from auction or you're buying to flip and things go wrong, are you going to be able to meet or satisfy the exit strategy? Have you taken the bridging loan out over the right term? Have you done a really short term because you think everything's going to happen very quickly? Make sure that you're taking all of the things that can go wrong into consideration, because a bridging loan can be very risky. And you want to work with a mortgage broker who understands bridging finance and understands the process, that they can sometimes help you and protect you from yourself. If you're considering a bridging loan, make sure that you speak to a professional. Bridging loans can be powerful tools when used correctly, but they're complex and they do carry risk. An experienced mortgage broker can guide you through the process, ensure the loan suits your circumstances, and can help you avoid costly mistakes. I find that a lot of bridging loans fall through. And the reason why they fall through is because you're not working with an experienced mortgage broker who can help mitigate risk or can talk you through the process in a way that is thorough, that you understand, and that you know that it's for you. The other reason why I find that bridging loans don't go through is because of the client. The client isn't truly prepared. So if you want a mortgage broker that can get you a home equity line of credit or a bridging loan and do it based on results, you might want to speak to me. So the way that our firm works, we do not charge you a fee until we get you a result. So let me talk you through the process. You'll reach out to me, you'll arrange an appointment. During the appointment, within the first 7 to 10 minutes, I'll be able to establish if I can move forward with your loan, if I can help you, about how much it will cost, and if you meet the criteria. We'll establish that within the first 10 minutes. If after establishing that, it seems like a green light for you and a green light for us, we'll let you know how much you qualify for. We'll then gather the documents that we need to get you an agreement in principle. And this is key. This is vital. You may speak to some mortgage brokers, or you may go online and they're just keying in basic cursory information, get you an agreement in principle. You don't want to do that. With us, we're going to do a thorough review of the documents you send over. So before we even do the agreement in principle, we're going to get your proof of income, we'll get your credit report, proof of ID, all of the things required that we can assess and make sure that your agreement in principle will convert into a mortgage, a HELOC, or a successful bridging loan. This is very important. You haven't paid a penny. You don't pay until we've decided that you're going to move forward, you're happy with the numbers, you've reviewed the numbers, you've agreed the numbers, and we get you an agreement in principle. That's when you pay your application fee. Once you have the agreement in principle and we're moving to the full mortgage offer stage, again, you don't pay a penny. You will not pay a broker fee until we actually get you an offer. So if we don't get you an offer, you don't pay a broker fee. This is not a promotion. This is how we work every day. This is why our conversion is so high from agreement in principle to offer, because we won't get you an agreement in principle unless we're confident that it will convert into a mortgage offer. This is also why we're able to move so quickly. So if you're considering getting a home equity line of credit or a bridging loan and you want a results-based fee structure, so you're not paying until you get results, make sure you reach out. My name is Anthony Lindsay and my number is in the slide. Let me explain to you why most bridging loans fail, and most of them do. By most, I mean, if I get 20 calls from clients who are interested in bridging loans, I'd say about six or seven of them actually end up converting into a successful bridging loan. And that's not because of me. It's quite often because although many inquiries are made, only a small percentage of bridging loans complete. So as I said earlier, there's lots of fees and costs that you will have to pay to do a bridging loan. It's not a quick fix. It's not a silver bullet, but it's a fantastic product in the right circumstances. So when you work with me, I'll help you calculate what the costs are that you can decide if a bridging loan is the right product for you. exit strategies may not be realistic or acceptable to the lenders. So this is where, if you're not an experienced builder or an experienced investor, you may have an idea in your mind that I'm going to buy this property and convert it into 4 apartments, but you've never done it before and you don't understand the costs. And so your exit strategy of, well, I'm going to refinance it and split the title may not be viable. It may not be doable. And therefore, the lender may not want to proceed based on poor planning on your part. The best and most successful scenarios are with experienced builders who have done this before. Some borrowers simply need faster, cheaper alternative once they understand the details. So you want to make sure you understand the details and compare it to the other options that you have. And there may be other easier, faster, or cheaper options to what you're looking to do. But as I said, the top 3 reasons are that someone would need money because a chain is broken. And usually this is going to be the fastest, cheapest, and best option for you in that circumstance. So a bridging loan could be good for you then. Auction is usually another good, solid reason why someone would need a bridging loan. And a professional property investor or developer will often use bridging loans to get them through circumstances where they need quick access to money, because a bridging loan can be turned around in days, not weeks. I'm happy to take appointments. We don't charge for appointments. You should book an appointment, I would say 6 months in advance of when you think you need it. That way we can give you the information that you need. Thanks for watching. And as I said, make sure you like, make sure you share, and make sure you subscribe.